Good evening, everybody. Hope everybody's having a nice summer evening. A perfect summer night here in Pittsburgh. And been very good trading. Here's another example that you don't sell in May and go away. And making some huge profits during this slow uptrend. And the benefit of the slow uptrend is the signals that are, or patterns that are real strong working are going to continue to work because there's no hesitation that there isn't any bearish sentiment coming in to these markets. Okay. Where did my little, maybe I've got the wrong charts. I need to put the moving averages back on. So as we can see today, the Dow came right down to the T-line and bounced right back up again. So there wasn't any real fear factor there because they weren't trading below the T-line, number one, until they hit it and bounced back up. But at the same time, we can see where the Nasdaq opened. Whoops, did I do everything right here? Where the Nasdaq opened right on the T-line and started trading positive. So that becomes an immediate, immediate acknowledgement that they aren't selling off the market. They're still, as long as one market's trading positive and another one's trading negative, doesn't mean there's any major change of investor sentiment. I don't use RSI. I don't have to. You can if you want to. I mean, people use RSI. I just have been very successful using stochastics. And the worst case scenario is you put both of them on there and see what they do. I just use, because don't have a better answer for that, Dylan, then I've just been very successful using the stochastics. And we can see what happened in the S&P 500. Nothing really changed. When it sold off this morning, it was very indecisive. So it pretty much told us there wasn't any major change of investor sentiment. Let me run through the crude oil. I guess I'll make this. Just kind of stuck here at the $40 level, which is fine. Is the Nasdaq a cradle pattern? Well, I'm going to ask you, ND, where does a cradle pattern usually occur? The green line is the 3T line. The T line is the black line. Lily, we had a technical problem with the last recording. So yes, the Nasdaq looks somewhat like a J-hook, but what is it? Yeah, it's not in the oversold area really. Oh, what was I looking at? Yeah, where does the cradle pattern usually occur? When your stochastics are down at the end of a downtrend. So yeah, you can consider this a J-hook pattern, but more relevant is the fact that it's still above the T-line, stochastics coming up, but there really isn't any selling pressure. I was trading soybeans today. You can see what soybeans have been doing ever since the bullish harami. And this is, so people ask why use the different moving averages? Because everybody is watching to see what's happening at the moving averages. We just have a visual illustration immediately to tell us what investor sentiment is at those moving averages. Some people say, well, why do you have the 34? Does it work? 34 works often enough to make it worthwhile. Let's see, what else was I looking at? Oops, I didn't even look at the hogs today. Yep, it seems to be failing here at the 50. ND, you can put the 20 on there if you want to. But I found that the 20 only works more effectively when you're in a big, steady uptrend. And right now, the T-line is much more effective. So, oh, there's my moving arrow. Okay. So the answer to that is put whatever you want to on your charts. Well, yeah, nothing. Barbara, soybeans has nothing to do with hogs. The see what the wheat chart looks like. Then you can see the wheat chart with the bearish harami, bearish doji sandwich is weaker right now. So yeah, one doesn't have anything to do with the other. The wheat is weak. And all you can kind of assume is that the weather has been much better for wheat right now than soybeans. All you can assume is that hogs are selling off, but cattle seems to be in a slow uptrend. Okay. What I'm going to try to... Oh. I'm been delinquent. We're going to be doing a member session tomorrow night. But I forgot what topic we are going to be doing. And I'm supposed to send it to Abe. Is there any topics that people would like to see in our member session tomorrow night? Well, this is the member session for our normal session. Then we usually do on a Tuesday or Wednesday night. Want to do spreads? Okay. We will be doing binary options. We're getting that set up. Managing emotions. Okay, hold on. And let me write down some of these. We've done some of these recently. So I'm going to do write down and see which spreads, emotions, entry and exit, rules, gaps. We might do gaps. That might be one because that's going to fit in for the people that are planning to come to this Saturday's Pamela, there is no top 4 bullish candlesticks. There's 12, and that's what, and there's combinations. There's about 18. Okay, longer term investing. Scanning for intraday trades. Okay, so now I got to scan. Wow, here I've run out of ideas for intraday trades. Okay. I'll see if I can get Trader Abe to do a session on his money line. Stop losses, we've done that recently, but we can still do that. 2+2, we're going to kind of talk about that even tonight, Bill. Volume, the difference why one stock moves and the others don't, that's all right. Will tomorrow's session be recorded? Yes. All right. What platform? Oh, we've got all that. I don't have that at the tip of my tongue, but Cam White is going to be doing, as a matter of fact, I should have put his link up. He did one. We've already done one on the euro, so he did a trade setup for that. And how about multi-day charts, 2 to 5 day? I can do that. Different chart. Okay, now I got a whole list. Chart time frames. Okay, all right. I got that taken care of. So Abe will probably let us know, or I'll let Abe know which one we're going to work on tomorrow. All right, here's what we're going to work on tonight, just to kind of get people, getting people signed up for the weekend, and which is good because this is a session that takes the information that is already available, the different signals, but through my experience through the years, when we found combinations that were working very well, I would have the same problem that a lot of people will say is, man, if you got all these good charts, how do you pick the best ones? And I kept going back thinking, you know, the years back, I kept thinking, all right, well, these are all good charts. You could buy any of them. But then it started to become evident that some combinations worked a heck of a lot better in three aspects. One, they produced extremely high probabilities you're going to be in a correct trade. And two, those trades were going to be much stronger price moves than merely uptrending stocks in an uptrending market, or let's just say off another candlestick buy signal, that the strong, what we call top rank signals and patterns were the ones that are going to produce big profits. And three, once you were in these positions, they were less influenced, or they weren't pushed around as much by the overall general market. The strength of the signals and patterns kind of pushed right through no matter what the market was doing. Okay, so let's take a gander here. People are saying, well, how did you pick this one out? You had to have some sort of knowledge or something to know that this was going to move this big. And the answer is no, I didn't. A lot of people say, well, when you're looking at charts, it's already moved. That's kind of the cow already out of the barn. That's not really doing us any good. And the answer to that is, yes, it is doing you some good. It is showing you this right here that started this. And so this goes back to what I call convergence analysis, or 2+2. If you see your Doji gap up, your best friend, that is the primary factor of what has the possibility of a big price move. 2, the fact that your stochastics are in an upward direction, so they're not selling off. And 3, the fact that they're doing it right on a major moving average, the 50, as well as the T-line, a gap up above the T-line. And then you can see also what everybody else is watching, this resistance level. So when we recommended this, did we think it would go like this? Had no idea. But we knew we were in the right position of a possible move like this. Now, does every move go like this? Definitely not. But this put us in a position to tell us, there's your probabilities. Now what becomes our next analytical factor? Simple. You stay long until you see a sell signal, 1, or a sell signal and a close below the T-line. So that gives you 2 pieces of information. 1, we were buying that because it looked like a strong move in the gold sector. So that means the gold sector is probably a good place to look for positions. There's Harmony, fry pan bottom, breakout with your best friend. We re-recommended, or not re-recommended, we recommended, we weren't in this one. But when we saw this, again, here comes that 2 plus 2. You've got a kicker signal. You've already got a strong price move. So you essentially got kind of a wave 1, a wave 2, and now a kicker signal going into wave 3. And we already know how to calculate wave 3. It's pretty much the same magnitude as wave 1. So all we're really recognizing is the patterns that are being confirmed by strong signals, in this case, the kicker signal. So that still allows us to pretty much assume that that sector is acting well. AG, silver stock, look where it broke out. It gapped up through the resistance level. What do we expect? Oh, Jace, have you not studied your 12 major signals? I know. So here's your lesson, or your lesson schedule. There's 12 major signals. They're on our website somewhere, but if you want to get them in a concise fashion, my second book, High Profit Candlestick Patterns, have the 12 major signals and the patterns that work extremely well. So a kicker signal is, notice how it opened here and closed here. Then they opened it at or above the previous day's open and went the opposite direction. That tells you the investor sentiment has been kicked in the opposite direction. Oh, that's true too. There's the 12 signals on the mouse pads. But the books are going to give you a lot more information. It's not only telling you what they look like, but telling you what the investor sentiment was that created those. That's what the Japanese race traders have done for us on a double benefit. Not only recognizing it, but explaining why that signal, or why that signal works. So here's another mining company. You can see the Morningstar signal. You can see the little Doji gap up. You can see you're here at this resistance level. So what can you assume? You can pretty much assume this is heading up, especially if it opens positive tomorrow and breaks out. You're still in an uptrend. So the reason that we want to understand what each signal tells us, or what each pattern tells us, is so that we can be in situations where not only are we in an uptrend, but we're going to be an extremely strong uptrend compared to the overall market or the majority of the moves in the just in uptrending stocks. Thank you, ND. Yeah, I didn't write these books because I was any great scholar. As you can see, it's all kind of written very straightforward. I was discussing the other day with somebody that had read Steve Nissan's books, and they said they gave up on candlesticks for years because they really didn't understand it. And the problem with his books were they were about everything. And Pam, that's still an irrelevant bill. That was what I was getting to. Steve Nissan, I don't think trades. I think he may have started trading, but when I read his books way back when, I was already trading candlesticks, and I thought, oh man, here's something that's going to give me a lot of information. And it didn't. It just told me about candlesticks, but it didn't tell me which ones were the best ones. And that's how I narrowed it down to the 12 major signals, so that you didn't have to learn the 50 or 60 candlestick signals. You just learned the 12 major signals, and that kind of gave you the whole premise of candlestick analysis. Now, that doesn't mean you want to not or to disregard the other signals, because it's good to know. And I myself will go back through, I think, my first book, Candlestick Profits, High Candlestick, I can't even remember the name of it. It's been so long ago. We published through Wiley & Son. But I'll go through all the signals, not to memorize them, but just visually recognize them, so that if I do see one, I say, oh yeah, that's a signal, and I'll go back and refresh my memory. Yes, so the problem with picking out the strongest signals is that they could change at any time. This month it might be the best friend for the Doji gap ups. Next month it might be hammer signals. And the next month after that it might be bullish engulfing signals. So what I'm looking for is the patterns, because prices move in patterns. Look at our fry pan bottom on CRNE until they gapped it up to the shooting star, bearish engulfing, time to take profits. Now what have they done? They've gapped it back up through the T-line, giving us a J-hook pattern or a classic fry pan bottom followed by a J-hook pattern. Thank you, Alex. All right. Yeah, so I try not to act at Trader Abe's. This is why I tell people, learn the basics of candlesticks. And the basics of candlesticks are the signals. Now, I've got a few indicators that work extremely well, which again is the T-line, the stochastics. So I could take everything else off this chart, which isn't all that much, and just use those three things, the signals, the T-line, and the stochastics. I could trade very, very successfully with that. The reason we have the other indicators on here is because that just gives us a little bit of added visual to show us where everybody else is making their decisions. So anyways, I've started buying SRNE going into the close today, because the expectation is wave 1, wave 2, starting wave 3, which might be the same trajectory as this. Oops, hold on, I gotta get a drink here. So as long as you can recognize the patterns, that's going to give you added benefit. Look at our slow curve breakout on ALT. We were buying right here. Not that we expected this, but we knew that this little slow curve was probably breaking out, was going to give us a good trade. How long of a trade or how big a trade, didn't know. But right now we can analyze, we had a nice strong price move. profit taking, and a J-hook pattern. What's our anticipation of this price move? Wave 1, wave 3. Do you leg into your buys? It all depends. And I would say 80–90% of the time, no. If I'm buying a position, I'm buying a position. If I'm buying a position that I'm not quite sure of, maybe I'll buy a half a position. Then if it confirms the next day, I'll buy the other half. Hold on to your ND, hold on to your individual ones. Did you ever get out of ALT? I never got out, but what I did do was somewhere up in here, I closed out the calls. Had very good profits. It was somewhere, and I can't even remember where it was. But then I bought the spreads, the 20, oh, it must have been right around in here. That because the stock had already gone from where we started buying it around 13, buying the calls, closed out here, but we didn't know whether this uptrend was over, so I flipped over into spreads, which had a lot less exposure, and if it still continued up, still had a good percentage move to the upside. Well, when I saw this yesterday, Friday, I could see a J-hook pattern setting up. So I bought some more calls a little bit further out, a little bit higher priced, obviously, than these. So that was a long answer to say, Tom, yeah, I closed out, took profits, went into spreads. Now I've got both the spreads and the calls working for me. Now, just to get off track here a little bit more, the calls, because there was only options for, I think, August. I try not to go any more than 2 weeks out on a spread, because what's happened now, since they've moved up, I paid $1.05 for a 22.50 and selling the 25s. So the $1.05 should go to $2.50. Except when it moves up in price like this that fast, the price of those options have nothing to do with the spread. There would be days where the spread was only worth 80 cents, even though the prices moved up, because the difference between the 22.50 and the 25s were 80 cents. So you could, and unfortunately, I'm sitting there, at least now they're going profitable again, but I was sitting for a week or two with a trade that was going profitable, but the spreads were going lower just because of the difference between the two. ALT, is the fourth candle from the right a bearish trend kicker? Fourth candle, no. Be a bearish engulfing signal. And so that was a potential reversal had it come back to the T-line. As you can see, it wasn't very compelling. Yeah. Do you let a spread expire? Very rarely. If the spread had 3 weeks to go and it was trading at $2.15 and it was going to maximize out at $2.50, I'll probably close it, because I don't want to be sitting with $2.15 for the next 4 weeks to make 35 cents. I want to go find something where it's much bigger. I will try to do a spread night again here pretty soon. So do you let the spread expire? I had a spread in something not too long ago that was very profitable, even the stock moved big, and I want to say it was on LVGO. And even on expiration day, when it should have been worth $5, the difference between the bid or the lower price and the higher price spread, it was still trading only at $2.80. which didn't make sense. So we just let it expire. Somebody exercised me, and I exercised somebody else, and so that was a $5 difference. We just had to do it with a stop. Okay, let me get rolling here. We'll be here until those darn cows come back in again. So what we're trying to do is find, obviously, the most strongest signals. And this is why I'm kind of pushing on this, because there's going to be stocks going up in an upward market. We want to find the ones that are going to go up the fastest. So there's hammer, gap up. There's your inverted hammer, gap up. You can see the magnitude of this move over the last 5 days, a very profitable trade. So that's what we look for. So a lot of people say, well, when you look back, it's successful. No, you're looking back to say, all right, this is the type of thing that can cause a price move like this. So there's IEGR, that if this opens positive, you've got the potential of a very strong percentage move to the upside. Or NBLX. Whoops, let's make this bigger. There's your Doji gap up through the 50. Stochastic's still coming up. You still got a lot of upside potential on that. Now, why do I say you have a lot of upside potential? Because if we know that's an indecisive day above the T-line, and they're gapping it up from that indecisive day, they're telling you which way they've made their decision. Not only have they told you the direction, but they've told you when they gapped it up above the 50, which could have been potentially a resistance level, and opened at that level and went higher, there's nothing in the way. The bulls are definitely in control. We recommended EDSA the other day because it was setting up as a fry pan bottom. It didn't execute on Friday, but it executed today because you can see what's happening and where it's trading compared to the T-line. Overstock, another one that we've been holding, because what is the basic analysis here? When you broke out, they haven't been able to close back below the T-line. And what happened when it came back to the T-line? A Doji left-right combo. That left-right combo is one of your strongest indicators of a bullish move. So if we've got a bullish move that pulled back to the T-line and starting back up, what are we looking at here? A J-hook pattern telling us we've got more upside. LVGO, same scenario. What's the one obvious thing that, I should state it another way. The obvious thing that has helped me make tons of money was the fact that maybe I closed out this position before we put the T-line on my charts years ago. Now at least I know to hold it until I see it close below the T-line. Because here's the one probability factor that everybody should keep in their mind. You're in an uptrend until you see a close candlestick sell signal and a close below the T-line. Harry, you're in here, aren't you? I'm going to kind of tattle on Harry. Harry said he stopped out of ALT today. I'm only picking on you, Harry, because you did what I usually do, or did, until I see what's happened. Yep. And I used to do that myself. And I wouldn't get back in because they weren't going to fool me and stop me out and then take it back up and have me buy back in and then take it back down. They weren't going to fool me until I figured out they had nothing to do with what I did. They were doing, or the market was doing what it was supposed to be doing. So in the past, I would get stopped out here, but then I would buy it back. And I'd say, all right, so I gave up a little bit. Now I'm just more patient. If it's down here, I say to myself, well, it's already down here. Let's see what it does at the end of the day. And then, so this would occur, this type of thing would occur many times back when I was SOS trading pristine would come out with a recommendation and just whipsaw a price move in the opposite direction. And I'm thinking, oh man, I've given up profits that I had built up for the last 3 days, gave it all back in 1 day, and I'd close out. Well, then by the end of the day, it would come right back up again or down again, depending on which way, and do what the chart told me it was supposed to do. So we bought BLFS, I think right here on this breakout, and so it makes it very simple. We just stay long as long as that gap up Doji off the T line and they can't close below the T line, we stay with it. IMMU. You can see the pattern setup. You can see how they couldn't close it below the T line. I'm going to try to run through these because a lot of them are same type of chart. GNMK, you stay long as it stays above the T line. CRE, you stay long as it stays above the T line. Look at how scary it was right here. And even if you stopped out here, you could be buying back here because at this point, after a left-right combo and an open lower and trading lower, yeah, I may say, get me out of this. But by the end of the day, what's it doing? It's doing the pattern we expected it to be doing. So there's been times where I'll close out here, and then I'm buying back here because it's still doing what the overall analysis told us it should be doing. So we have the capabilities of seeing exactly what investor sentiment is at specific spots. Now, here's one of the trades that no, I'll have to go back to CRE. Here's our breakout. There's our 45 degree. But what has it still not been able to do? Still hasn't really been able to close below the T line. Now, we've got a Doji sitting right on the T line. Which direction is this price moving? Pretty much sideways. So what do we have to our advantage to tell us which direction this is ready to move? Absolutely nothing. So if this doesn't open positive and trade positive tomorrow, we close out the position and we go find something that looks more like this. This is part of that entry and exit strategy. If we've got a good profit and we can't tell which way it's moving from here, close it. Go find a better probabilities situation. And the stochastics, yeah, the stochastics are heading down, but they're not going down with any great speed. Do you set trailing stops below the T line? Yes. If they're trading close to the T line, but if it's still in an uptrend, I'm still going to wait till see where it closes. I don't want to see it close below the T line. Belt hold, no. That's just a bullish engulfing signal. A belt hold is something that you can see was dramatically out of the trading range and then comes back up into the trading range. And dramatic meaning you can see that it definitely moved out of the trading range. Let's see. Rollins, another one. This is why we use the T line. This is why the signals at the T line are very relevant. There's our kicker type signal. Never has been able to close back below the T line. When moving averages are above the price on some of these setups, do you move to others because of the potential resistance? No. Moving averages are just moving averages. The whole basis for candlestick analysis is seeing the signal. Let me find another chart to. Seeing the signal. If there's a moving average, and I have a lot of strength in my stochastics, all I'm doing is once it gets to that specific moving average, I just watch to see what everybody else is doing. But it doesn't deter me from entering that trade when I see the signal. So here's your fry pan bottom on TBIO. Kind of lollygag today, but you can see the overall trend. This fry pan bottom. What would you do on a positive open tomorrow? You want to be buying because there's your Doji sandwich, fry pan bottom. Where do you think your next, at least your next target is likely to be? There's still a gap up here to fill. So a positive open doing a Doji sandwich makes it a good, yes, and I was going to get to that. It's up after hours, and I don't know why it's up after hours, but I don't care why it's up after hours. I own the calls ever since the inverted hammer breakout. Now, I don't really who was asking earlier which ones were the strongest? I forget. But this is one signal. Well, the kicker signal is your strongest one. The inverted hammer is your strongest as far as percentages. But if you see an inverted hammer, especially in the oversold area, and it opens positive, you got about a 95% probability or greater that you're going to be in an uptrend. So the inverted hammer is probably the least frequent of the 12 major signals, but it's your highest, one of your highest probability signals. What are the probabilities of a belt hold, and or is there a certain direction that it usually follows? The belt hold tells you they've wiped out a lot of sellers, and this is where we're going to be getting to on Saturday. Is there's about 18, which the belt hold fits into that category, that produce high probability results. Now, a lot of people say at the end of the session, they say, oh, I can't remember all of these. We don't want you to remember all of them. We're going through the 18 to tell you or show you these are high probability results with high profit results that you probably want to orient your scanning or your cultivation of the best signals using those top-ranked signals and patterns. But you don't need to learn all 18 to the hilt. Our suggestion has been recently that you learn 3 or 4 and become an expert at those 3 or 4 signals or patterns. And I can guarantee you that if you learn 3 or 4 in and out, so you don't have any questions about where to get in, where to stay in, when to get out, you will now not have the emotional effects of listening to everybody else, listening to the market. You'll be able to analyze what's actually happening in that price move or whatever you're trading with expertise and not be influenced with your emotions. And with 3 or 4 of those patterns that you learn extremely well, I can pretty much guarantee you'll always have more trades than you'll ever be able to handle, which means you'll still be cultivating for the best trades setups so that you're picking out the absolute best ones. How far out do you buy your calls? All depends. Larry, because I'm looking at candlesticks that are telling me what's happening right now, I'm usually an average of 2 to 3 weeks, maybe 4 weeks out. If I'm doing spreads, they're only 2 weeks, and that's because I don't want to be too far out in the front. When you say the inverted hammer is one of the strongest signals, does that happen at the bottom during a trend or at the top? No, an inverted hammer will. Where does an inverted hammer occur? I'll answer. At the bottom, yes. Oh, I don't know why it doesn't have any sound. What is an inverted hammer at the top of a trend? That's a shooting star. And J Snow, we don't use deltas at all. Don't use any of the Greeks. Because what the delta may have been here has absolutely nothing to do with what this price move is going to be. So all we're looking for is the price movement that's going to be magnified, not based upon what its history has been. ND, I don't know, and I don't even pay attention to that. So when you're buying options, same scenario. The options, deltas, gammas, betas had nothing to do with this move based upon what was happening here. The whole point of candlestick signals is the signals themselves. Let me keep, we haven't even gotten out of the ones that we're in. Whoops, that one we don't want to, somebody did something wrong there. So look at your fry pan bottom happening here on ENPH. All you can do is stay long. And your simple strategy is stay long as it doesn't close below the T-line. No, Don. Yeah, so we ignored the Greeks is right. Inverted hammer to be effective is just that big tail to the upside. I have another one. I'll have to find it. But it doesn't, remember, the inverted hammer is a very small body, either red or green, with the upside tail or shadow very long. I've got one in here somewhere, I forget. I'll recognize it when I see it. Simple was another one that we're holding on to because of the bobble breakout. We stay long as it stays above the T-line. Whoops. Yes. Oh, was that it? Yes, so that was the inverted hammer. But there was another one I thought, which was your ultimate inverted hammer is your gravestone doji. All right, so when do you take profits? When the probabilities start going against you. So look at your best friend gap up on BE. Never closed below the T-line, but now look what's happening. Look how far away we are from the T-line. Shooting star. So there's your inverted hammer, but if this was occurring down here, it would be an inverted hammer. When it's occurring up here, it's a shooting star. Now we're starting to see selling. So is this the best place to have your money? No, we're starting to see sell signals in the overbought area. Stochastic's heading down, probably heading back to the T-line. Probably a good time if you bought down here to take profits and go find something that looks more like this. By bobble, do you mean consecutive days of indecision? No. A bobble, I'll find another bobble breakout here in a minute. That was it, I think. Yeah, there was an inverted hammer right in here. Then it opened positive. Okay. So we can see what's happening in Vivo. You might have closed it out here, but now you can see the J-hook pattern setting up. I don't know if this is a big, huge, it is. Fry pan bottom, J-hook pattern. Whoops. But it did your bearish dark cloud. If you're long, what needs to happen tomorrow to stay long? It needs to open positive and trade positive. If it opens lower, after that dark cloud, after the selling right in here, what's that telling you? You don't have a breakout, you now have a double top, close out the position and find something else. This one made big money, and I was hoping it was going to go up even further. Had our kind of little methods rising breakout, but then it did a left-right combo. Will, I keep telling people, if you learn from your mistakes, I'm one of the smartest traders you're ever going to come across, because I've made every single mistake you can think of. And I would perfect those mistakes by doing them over and over. It was when candlesticks came along that when I looked at the graphics of candlesticks, the one aspect that kept hitting me in the side of the head was, this makes sense. I knew this. I just never saw it in a graphic formation before. So then I would start trying to second guess the charts, saying, oh, this can't be going down right now because everything sounds so rosy. Has positive futures. Well, he did a left-right combo. So I closed out because what's my expectation? It might be coming back here. But I've already got huge profits in it. So I took the profits, and what's the worst case scenario? It can buy back once it breaks out through this level. Can you do this without options? Oh, yeah. Joe, this is, yeah, you should be doing it the opposite way. Joe, if we get, first Joe. Yeah, you can do this without options. I just happen to trade options, but I've got a lot of these in stock positions also. So when I saw this today, in the getting up toward the overbought area, doing a left-right combo, I know the left-right combo is one of your strongest reversal signals. Why take the chance? Go out and find another position like this. There's many of them. So, as a matter of fact, I think I sold these calls, again, very, very profitable, and I moved them over to this one with the idea that I think they were about the same price for whatever I sold out and bought, but this was heading in this direction, whereas VXRT was heading in the wrong direction. Tom, that's part of my strategy, that if I'm in an uptrend and it's trading up here and I'm in the overbought area, I'll put my stop at the open, because if it comes back down through there, that means they've changed direction. So when we do we can do a stop loss session here pretty soon. I can go through the different logical strategies for where to put stop losses. Here's another one that was acting well until today. It closed below the T line. What's our very simple rule? You're in an uptrend until you see a sell signal and it closed below the T line. So we closed it out. Could it turn around and go right back up? Sure. But that would mean we're hoping that it's going to turn around and head back up. At best, it might be in a very slow sideways like this. I'd rather close it out and go find another situation that looks like this. As far as the big traders, JNUG. Whoops. You can see what it's doing. Fry pan bottom, J hook. Amazon. Kind of a J hook pattern. Even if you're not trading Amazon, the fact that they closed back up above the T line today just told you that the bullish sentiment is still in this market. Same scenario on Apple. Apple's had a nice steady uptrend. Using the T line keeps you from being whipsawed in and out of this position. Tesla. There's a J hook pattern setting up. Look at what happened at the slow curve. This is one of the patterns that I use quite often. But if I see this slow curve, I'm buying because I'm going to get two results. One, this type of move, Or two, if it fizzles, you're back out with a very small loss and you go on to something else. That was kind of the same scenario, whoops, right here. Why we're buying right in here. And this was actually late in the day. It was like an hour, maybe 45 minutes left in the day. I started buying right here thinking if they open up positive the next day, they're breaking out. Well, they finished up the day right here. Made for a very good day. Look at Facebook. Facebook is not one of the best ones right now. It's just not got a real powerful chart. A cradle pattern, not really. Now remember where a cradle pattern occurs. It's down between two trends. Joe, I forgot to answer your question. If this opens lower tomorrow, close it out. That's VRTX. UPS, we made very good money on the calls as it was breaking out of a bubble breakout. Made very good money on those calls. I think we were buying at 290 and got out at 820. Oh, and I think we had some spreads that were very profitable also. Nvidia, well, Shazam. Nvidia, another one where you could probably be buying with the expectation that it's coming back up to the top of the channel. And again, kind of telling you that the overall market's investor sentiment is still bullish. There isn't any signs of weakness. FedEx, you stay long as this stays above the T line. What else did I? Oh, Blink. Blink, this is why you want to see how things open. If you cut the chart off right there, this looked like a very good J-hook pattern setup. Is there a way to scan for the slow curve? Oh, Jim, do we have that scan down in the file box there on the right? I'm not sure. I usually identify the slow curves by an upward move, and now it's kind of pulling back, and then I watch to see if that's a slow curve setup. Now hold on to the individual ones, Steve. So this one, if it opened positive today, what do we have going on? A bullish doji sandwich creating a J-hook pattern. This is why you want to see how they open before going after them. This one opened lower, traded lower all day. However, where did it close? Still closed above the T line. If it opens positive tomorrow, that's when you want to start buying. Okay. Oh, mercy sakes, we're way over time, and we're just starting on the ones that are looking good. There's pin interest, can be bought on positive trading. MBIO, you can see the series of dojis. Remember, if one doji means indecision, a series of dojis means greater indecision, and all we're looking for is what is their decision? And we can see what their decision was, bullish. That tells you we probably got our next target up here filling the gap. Maybe a series of candles. Usually it's a slow curve. You'll be able to recognize a slow curve. And let's see. PRPO. There's your doji sandwich potential. So here's the 2 plus 2. If it opens positive, what do you got going on? A doji sandwich. What's it tell you about your resistance level? Well, it opens positive. What's the magnitude of this candle going to be? Probably this. Tells you the 200 is not acting as resistance. You're heading up here toward the trend. Lil, that all depends on how they close going into earnings. If they're buying strong going into earnings, usually the money or the smart money knows what's going on. If it's a doji or they're selling off going into earnings, you close it out because that means nobody's really confident about what's happening. So if they were coming out with earnings this afternoon and it was closing like this, I'd stay with it. If it was looking more like that going into the earnings, I'd close it out because it's telling you they're indecisive. But we did PRPO. I know a lot of people are watching this one, Workhorse, so you can see what's happened. Big move. Profit taking. Now, usually what happens, again, when was it time to sell? Look how far away you were from the T-line. You'd go to your 10-minute chart and start taking profits. Because where was your likely target going to be? Back here to the T-line. Then it goes flat. But today we had a bullish engulfing signal. So you start looking to be buying on positive trading. If it opens lower, you don't pay attention to it. It's still stuck in the flat. Uh-oh. How does this have? Ah, I goofed up. Yeah. So there's your kind of a bullish flutter kicker, J-hook pattern. You can get ready to buy this one again. No. Remember what a belt hold is. It's something that you can see moved way out of the trading range. This is still kind of in the trading range. That's just a bullish engulfing signal. What was our belt hold that I remember? How was it? AMGN. There's your trading range. It gapped way down here and then came back up into the trading range. Maybe it isn't. I'm colorblind. I'm sorry. It's more of a doji sandwich. Okay, 2 plus 2. This is what we're going to be concentrating on. You can see how you had the fry pan bottom, then the doji sandwich, putting you in the right direction. And you can see how you had, let's make this bigger. You cut this off right here, what did you have going on? Pretty much that wedge. So when do you want to buy a wedge? When it breaks out one way or the other. That gives you the probabilities. You're seeing a little bit of bullish signal in here. That was somewhat the same thing we were doing on INO because it was breaking out through a wedge. Let's do this. Pointer tools. Then it fell back into the wedge today. So it's still now stuck in the wedge. If it starts trading lower, you close it out because it's not doing what it's supposed to. If it comes back up through this level, you still have the potential of another strong price move. Would you use stochastics? Would you use stochastics? Not necessarily. Remember, stochastics, if you're buying a buy signal, you're looking for stochastics in the overbought area. If you're buying a pattern breakout, stochastics will probably already be up in the overbought area. IBIO, is it the time today to take profits. Oh, IBIO. This is where you use a trailing stop. I'd have a safety stop right here, but you can see how far away you are from the T-line. If it starts coming up here and starts showing some selling, I'd watch my 10-minute chart. The further away you move from the T-line, the more you want to put your 10-minute chart into play. Kind of the same scenario. Look at your Doji sitting right here on the breakout. Your 2+2. If it starts trading positive after a Doji, what's it tell you about the resistance level? It's not going to be there. Where does something usually break out? Usually breaks out right at a level that everybody else is watching. Okay, now we'll bring up match to see if that's a wedge. Nah. But you do have a resistance level, and you have a bullish engulfing signal. Where did it occur? Right smack dab on the 50. So this is the visual that gives us a huge advantage with candlesticks. If we can see there's a bullish engulfing signal, one of the 12 major signals, right on the 50, what's it telling us? That's telling us that's where the buyers are stepping in, off the support of the 50. So that support level is your 2+2. Bullish engulfing right off the support level, close above the T-line. Where would I be buying? I'd be buying on positive trading tomorrow, telling me that they broke this downward trend channel. Other support levels, here's ADP. Kind of a bullish left-right combo, right smack dab on the 50. What's it telling us? Everybody's been watching to see if it's going to support on the 50, and they're starting to buy. That one, you can start buying on positive trading tomorrow, because you've got the added benefit of not only a candlestick signal, but where it's occurring at a level that everybody else is watching. There's your bullish Harami. How do these things get all over the place? Gap up through the resistance level. That right there tells you they were buying off the 50 and they aren't resisting at the 200. There's probably more upside. There's your fry pan bottom with a Doji sandwich. Anytime I see a Doji sandwich setup, you can get a much more clear visual of what the pattern's going to be, because you know you can expect more upside. Here is a inverted hammer. There's the inverted hammers. Inverted hammer, bullish confirmation, J-hook pattern. Look at your little slow curve breakout through this whole level. Can you anticipate that it would have done something like this? No. But when you put yourself in this position, you're putting yourself in a position where the probabilities of being in something like this are dramatically in your favor. INFN. When they break out, when you see those little signals, kind of a little best friend signal right here at the breakout level, when they opened positive today, what do you think everybody that was trading this stock was watching? They were watching to see if they were going to break out through this level. We already knew there was a buy signal going into that resistance level, so we could be buying here, because what do most people do? They want to see, or they want to, they're buying up here. We've got the capabilities to be buying immediately, because we know we're at a breakout level with a candlestick buy signal. There's your double Doji setup. And then a close right here at the breakout level. When it opened positive, you could be buying immediately with a lot more confidence. Wednesday earnings, okay. Well, that may be the reason why this is running. DQ, that's not right. Best friend Breakout, probably a 45 degree. Say that's not right. That should be Dairy Queen. It's got a curl on top. Going back to the concept that you don't need to learn everything, but you want to learn some that are extremely well. There's your message. A big gap up, and they sell it off. Now what do we watch? To see when the selling stops. Because what's the message? They gapped it up with lots of strength, and now we're just waiting. Even though they're selling it off, we're waiting for the profit taking to end, and that's when you can start buying. Bah humbug. I don't know where I came up with that symbol. BTAI gapped up today off a bullish signal off the 50. What do we watch for? You watch to see when the selling stops, then you've got a high probability that there's going to be an uptrend afterwards. Which means now, if you become an expert at that, you decide what type of strategy you put on, whether you buy the stock, or maybe you buy calls, or maybe you buy a call spread. There's a belt hold signal. Not a belt hold signal, a message. Now the difference between a message and a belt hold is, had this come all the way back down into the trading range, now that becomes a bearish belt hold. The fact that they couldn't come back down into the trading range told you that there was strength. Now anticipate that this is eventually is going to come back up at least to test that level. And so here's a high probability trade setup. Your McMuffin. Your Morningstar signal, which is one of the 12 major signals. And we know what the 12 major signals tell us. There's probably a reversal. There's our Doji sandwich. What's a Doji sandwich tell us? There's probably more upside. So now you've got a Morningstar signal followed by a Doji sandwich. That's kind of a double dose of bullish confirmation. Or your morning sandwich, your McMuffin, gives you an extremely high probability of a reversal. There was your Morningstar signal and your McMuffin, Doji sandwich. That's why on that day or that time frame, we said this was the bottom. Start buying. Not because we had any clairvoyance or anything. It's because when you see a McMuffin, the probabilities are pretty strong that that's a major reversal signal. STMP, there's your fry pan bottom with a Morningstar signal followed by a Doji sandwich. What's that tell us? This fry pan bottom, it's still got more upside. So you got a fry pan bottom breaking out with a McMuffin, just double confirmation that the bulls are in control of this trend. Makes it a very strong prospect to the upside. There's your J-hook pattern. JKS, Jenko. There's your J-hook pattern, which means you look at some of the other solars. There's your J-hook pattern classic. CSIQ, fry pan bottom, J-hook pattern. So the patterns just give you that benefit of being able to go after something a lot faster with a lot more conviction. There's your Doji sandwich breakout. So if we were trading this and we could see there was a T-line crunch coming right back up to the resistance level, and Doji closed right smack dab on the 200, if it opened positive, what was it telling us? They weren't resisting anymore because the Doji rule said it's going to be moving in the direction of how they open after a Doji. We could be buying here and making very good profits by the end of the day. Yeah, the difference between a belt hold and a message. Oh boy. This is a belt hold. Bearish belt hold, bearish engulfing signal. Gaps way up and comes back into the trading range. Now that could be just back into the trading range. It could be a dark cloud. It could be a bearish engulfing signal. I forget which ones were the messages. BTAI. This one didn't come back into the trading range. So now you watch to see if when the selling stops, that should start your uptrend. The T-line crunch is where, which one did we just look at? STBR. You can see when it came up, pulled back, and see how it kind of they supported right on the T-line. The T-line kept crunching up. This is what you would call a bobble breakout. Somebody was asking earlier, what is a bobble breakout? A bobble breakout is you had your left-right combo, came up, did your evening star signal. So you probably would have been taking profits right here. So it failed at the 200. That was obvious. Then it couldn't pull back below the T-line. And so when it came back up through the 200, that's your bobble breakout, which is a more defined J-hook pattern, because if you took the 200 out of here, you essentially just have a J-hook pattern. Kind of a scoop J-hook pattern. Another one that could be bought on positive trading. Let's get rid of that thing. And if it comes up through this level, what do we anticipate? Wave 1, wave 2, wave 3, the same as wave 1. Here's a cradle pattern. Kind of a pullback. Usually they're down here. Let me see if I've got one that's more. That's more of a cradle pattern. Look where it traded flat. Indecisive. Right smack dab on the 200. Now what's it telling you? There's the cradle pattern. What's the cradle pattern tell you? That the cradle, which is the headboard, the bed, and the footboard, are hanging down between two trends. More than likely, this is going to have a nice, strong uptrend. Yeah, the bed can be lumpy. The flatter, yeah, just you can see that it moves sideways. You like to see them pretty reasonably flat, but it only takes a split second to say, oh, that's a flat trading range. Square, not a cradle pattern, but you can see how it traded flat and back up. What's that kind of tell us? We've probably got a J-hook pattern setting up. Melly, same scenario. Because of the dojis. AYX, same scenario. Probably going to come back up into that trading range. Vonage, same. And Trade Desk, also the same. This flat doji, 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 then they tell you which way they're taking it. Now you can see what type of pattern is setting up. The J-hook pattern. We did those. All right. I guess we did all of them. All right. So the whole point of all this is that we want to be able to find the strong signals or patterns so that if we have a day like today where there is probably 20, 30, 40 good trade charts out there. So the question is, well, how do I pick the very best ones? Or how do we get into positions like this that are going to have big upside potential. And that's what we're narrowing down. I've had the reason we do so much repetition is so that if you can see this is what happens, that you start recognizing it when the chart looks like this. I mean, it's a lot easier to look at a chart after it's moved and say, oh, that's what happened. What's hard is, all right, look what happened. We've got a Doji gap up through this level, and they gap up again at this level. We're buying in here as long as it stays above the T line. We want to be able to recognize or reverse engineer by, if this is a strong price move, what caused it? We want to start identifying the way investor sentiment acts to start those big uptrends. So hold on, somebody wants this. Here it is. There's the link for the weekend. The weekend or the Saturday, again, we've got it advertised as 4 hours. Figure on at least 6 hours. But when you get done with it, hopefully what you've done on your little notepad is saying, I like the kicker signal, I like the best friend, I like the fry pan bottom breakout, and I like the bobble breakout. So I'm going to concentrate on those four. But I also will recognize what should happen when I see a left-right combo, when I see a belt hold, when I see an inverted hammer. You already have that in your head, but you may not be, completely adept at trading those, whereas you pick out 3 or 4 and become real good at it. Now you're controlling your own investing. And it's not like you're investing in something that's going to change on you. This stuff has remained the same for hundreds of years. All you're trying to do is become an expert at what time does it start? I think at 10. Was it 10 o'clock when we started in June? Is it the same class as the Saturday in June? I don't know. We didn't do, what did we do on Saturday in June? I don't think it is, Barbara. Forgot what we did in June. I forgot what we did last week. 10 Eastern, yes. What time tomorrow? 8 o'clock. Normal time. Was breakouts, all right. You bought it and never watched it. Barbara, Barbara, Barbara. Shame on you. Okay, any general questions on candlesticks? If not, Jim, go ahead and do the double line. Try to limit yourself to 1. Yeah, so we can get through. Yes, you do have homework. Now, if you are fairly new and you're you haven't learned your 12 major signals, don't let that be a deterrent, because what this will point out is that you really do want to go back and learn the 12 major signals so you can apply them to these patterns. AB, IO, you can still buy this. There's your left-right combo Morningstar signal off the 50. So again, why do we have the 50 on our charts? Because everybody has the 50 and the 200 on their charts. We're not putting it on here because we want to do what everybody else is doing. We want to watch what everybody's doing at those levels that they have on their charts. Micron, nothing. I wouldn't be long or short. There's no great movement on that one. PO. That one you can buy. Just make sure your premium is pretty hefty. You do have kind of a left-right combo, left-right combo. I would anticipate they could be coming back up to the 200, which would be the trajectory of what the trend was prior to the sell-off. CrowdStrike, you can get ready to buy this one. This one looked like it used the 34 as a support level. Work, you can buy this one, but you have to make sure it gets through this level. So you could buy it, just watch, see what happens when it gets to that level. XLV, you stay long. There's kind of your inverted hammer, gravestone doji, bullish confirmation, breakout. And again, look how they broke out. They gapped through this level, whether you want to call it here or here. The fact that they're gapping up in the breakout area tells you there's still a lot more upside. And Wayfair, all you can do here is stay long. Hold on, I got to check. Hoping soybeans would act a little bit stronger. Callaway. You're right here with a doji. So if it opens positive, what's it telling everybody that's watching this resistance level? They're going through. You can be buying immediately. APT came up. You stay long on this one, as long as it stays above the T line. Silver. Still trading positive. Means that whole sector is still working well. NIO, if you were short, you covered your short, but I wouldn't be going long because it's not a signal, not until you see something more compelling above the T line. And PTSI, you can buy this one that bounce off the 50. IOVA, uh-oh. Another one that if you're long, you stay long. Now you watch to see if they can get through the 200. I'm sorry, through the 50. Whoops. Stay short. Bearish Harami, gap down. Look where the selling started. Gap up shooting star, bearish left-right combo. Right now you've got a slow curve to the downside. Stay short. And FedEx backed off a little bit today, but if it opens positive, there's your double doji setup. You can be buying immediately. And Vail, nothing exciting there. You're stuck sideways. If this opened lower tomorrow, I'd probably close it out. Potential J-hook, but let's see, what color? Yes, you do. You've got a green candle. You've got a potential, so it definitely you want to see this open positive tomorrow. We did work, right? Work, again, needs to get through this level. You can buy it. Just make sure it gets out of the sideways channel. Dropbox, best friend gap up. Still not a very interesting chart, meaning it's sideways, but the fact that they did a best friend gap up tells you there should be more upside, so you want to make sure it can get through this level. And BSTZ, nothing wildly exciting here other than it is in an uptrend. You stay long as it stays again above the T-line area. Nuance, that's a bullish Harami breakout. Another one you can anticipate probably coming back up to the top of the channel. Square we did. You can buy this one also with the anticipation this little J-hook pattern will bring you back up into the channel. And Baba, you can buy this one on positive trading. Doji gap up. IBM, they exceeded their earnings, right? I think they're trading way up, so that should help the market out tomorrow. UPWK, another one that is probably eventually coming back up. You can buy this one if you like it using the T-line as your stop. SNGX, big breakout with a booster, left-right combo. You're sitting right here. If this opens positive, you can be buying immediately. OPK, if this one, you got to be careful. This one has to open positive. If it opens positive and giving you a doji sandwich, put your safety stop at today's close. We're open. Because if it comes back down through there in the overbought area, they're doing a sell signal. And Nikola, if it opens lower, you can short it. I think the 200 is down. Why is the 200 not on my chart here? That's strange. 200 is down here someplace. You could be shorting it. And Roku, nothing yet. If you're long, you stay long. Your safety stop right now should be at today's low. If it comes down there again, they're not holding the T-line. Kendai, nothing. You can't, I don't think you could be short, but you definitely don't want to be long on this one. Nothing there. PACB, stay long. You can buy this one on positive trading also. Bubble breakout or a J-hook pattern doji sandwich breakout. APVO, you can buy this one. Use the T-line as your stop. Sabre, nothing. At best, probably wouldn't be long or short this one. You can see you're just kind of sideways here, unless it really falls out of the bottom. And NIO we did. I wouldn't be short, but I wouldn't be long. Apple we did. Still in an uptrend as long as it stays above the T-line. AMPH. AMPH, you stay long, but if it opens lower tomorrow, you close it out. It's probably coming back down to test the 50 one more time. It has to open positive. And TRVN, another one that you want to see open positive. I would not want to see it trade back below today's low. That would tell you you aren't going anywhere. GDOT, stay long as it stays above the T-line. Vive, that one you can still be buying. At least figures coming back up to the top of the trend channel. DXR. Yeah, this is anytime you see this situation where they have a big move and then they gap it way down toward the lower end of the trading range, close it out. I don't know whether I'd go short. I just wouldn't want to be long. Nothing on SRN. On FedEx, not necessarily, because you're still in an uptrend as long as it stays above the T-line. Let's see. OTKA, is that what it is? No. Did I type it wrong? And ZS. You can stay long on this one. Codex, nothing here. That's just a sideways chart. I'd be someplace else. Oh, IBM was today. That's right. They had gapped way up after hours. Here, just stay long. That could be true too, DC. Run, stay long, put your safety stop at today's open. Again, look at your slow curve breakout. Salesforce. You can buy this one. Notice how it bounced right smack dab off the 50. Doji hammer. Look for it to come back up to the top of the channel. Oh, do I do that? All right. Maybe my fat fingers hit stuff. Okay. This one looks like it's going to be opening positive tomorrow. Let me see what I put stars next to. I think I've got a star next to ADAP. But if this opens positive, you want to start going after it. LLNW. I don't know why I have a star next to that one. Well, I thought I put a couple stars. No, I have to go back through and find them. So, all right, with that, everybody, we'll see everybody bright and early in the morning. Okay, hold on. Yeah, so he wants the link again for the weekend. There you go. With a Capri. Yeah, that looked pretty good. Okay, everybody have a good evening. Enjoy the summertime. We'll see you bright and early in the morning. We'll see you then.